Hey guys, it's your friend Kobe here, and welcome to today's video. If you look across YouTube, there are lots of sensationalized headlines about how cryptocurrencies are either headed to zero or headed to the moon. Whether it's people are saying Ethereum will hit 10,000 or Bitcoin will hit 1 million, these headlines are all kinda crazy. Let's be honest, no one really knows what the future of cryptocurrencies are. And I would worry that many of these people are saying crypto will go up just because they have some economic position in crypto that's probably in the red right now. They hope by making a video saying that it will go up, that it might actually help it go up. So what I've decided to do for this video today is go through the pros and cons of the future of cryptocurrencies like Bitcoin and Ethereum, and give you 5 reasons why we could see crypto skyrocket and 5 reasons why it probably won't. Then you can decide for yourself what you think will happen. Also, I'll be talking specifically about Bitcoin and Ethereum when I refer to cryptocurrencies. We won't be talking about smaller altcoins, because if Bitcoin and Ethereum succeed, you'll see more altcoins succeed. If they fall, you'll probably see all the altcoins fall as well. If you appreciate this honest approach to making content and you want to see great videos that are well researched and hopefully entertaining, be sure to subscribe. I make videos about business, like why solar freaking roadways failed, and about personal finance, like is peer-to-peer lending a scam? So if either of those groups of topics sounds interesting, you should definitely subscribe. You won't regret it. So let's start with the 5 reasons why Bitcoin and Ethereum in general will go up. The first reason why crypto will go up in value is that the economic outlook of the US and the world at large will improve. Let's say in the next couple of months that inflation has fallen a ton, the war in Ukraine is magically over, and all of a sudden companies are hiring, not laying off, because recession fears have subsided and the Fed actually landed their soft landing. As you can see, the fall in Bitcoin occurred at the same time as the stock market fell. The whole market went from thinking everything was hunky-dory to realizing that inflation was a really big problem, interest rates were going up, and economic expansion was not inevitable. Obviously, crypto fell a lot farther than the S&P 500, but that's to be expected. Bitcoin and Ethereum are much more volatile than the S&P 500. So is a soft landing and a little to no recession possible? Yeah, it is possible, but is it probable? Probably not. Most economists are saying that we're really likely to have a recession, but the length or depth of the recession is unknown. But eventually the economy will recover, whether that's in 2 months or 18 months, the market will recover, and as economic outlooks look up, people will begin to look more and more into speculative investments like Bitcoin and Ethereum. The second reason why crypto will go up is that interest rates will fall. Now you might be thinking, wait, Kobe, isn't that the same as number 1, macroeconomic conditions will improve? And I would say they are actually 2 different things. Yes, if inflation falls, the Federal Reserve would be more likely to lower interest rates. However, the Fed usually lowers interest rates to help stimulate the economy. So if inflation fell, but the economy started humming along because things like supply chains got fixed, wars stopped, or something else occurred that caused the economy to keep growing, the Fed would not lower interest rates immediately. Why stimulate the economy if the economy is doing well? If interest rates remain high for a couple years, this means that borrowing to invest will cost more, which means fewer people will take on margin positions in speculative assets like cryptocurrencies. This means that you will be less likely to see an increase in the price of Bitcoin or other cryptocurrencies. But if our economy starts to putter and the Fed decides that we need to kickstart it, the lower the interest rates go, the higher the price of crypto will go. But there are intrinsic aspects of these coins that could actually lead to higher prices, not just macroeconomic conditions. And that's where increased adoption and usage comes in. Bitcoin adoption has been increasing at an annual rate of 113%, according to data from the digital asset management firm CoinShares. Meanwhile, for perspective, people adopted the internet at a slower rate of 63%. If people warm up to Bitcoin at a comparable rate to that of the internet's early days, or even faster, this report makes the case that there will be 1 billion users by 2024 and 4 billion users by 2030. If these projections come to pass, then you could absolutely see Bitcoin and other cryptocurrencies skyrocketing in value. But in order for it to work as a medium of exchange, companies will need to start accepting it. There have been rumors of big companies getting involved. For example, Amazon was hiring a digital currency and blockchain product lead a little bit ago, which means that they're at least looking into the idea of doing something with cryptocurrencies. Institutional buy-in would really help a lot, but also finding new use cases besides just making money would really help in its adoption as well. Right now, whenever anyone talks about crypto anything, it almost always devolves to look at how much money you can make from investing. If you really want crypto to become more than just a speculation investment, you need to find ways that it could be used. Whether that be speeding up international money transfers, making smart contracts to buy homes, or keeping healthcare records more secure, it needs to have a use case. Once you see crypto expand from just being a stock equivalent to being a useful business tool, you will see its value skyrocket. And this leads us to reason 4. Bitcoin and Ethereum's relatively limited supply can give them a value because unlike the dollar or any other money that is controlled by a government, these coins cannot lose their value because the government decided to pull a Venezuela or a Zimbabwe and print so much of the currency that it loses its value entirely. Bitcoin has a hard cap of 21 million coins out there. Right now there are about 18.5 million or 89% of the total possible Bitcoin in circulation. Over time, as more Bitcoin is mined, there are things that are called halving events. Bitcoin halving is a process built into the Bitcoin protocol that reduces the rate at which Bitcoins are created and added to the total supply. This process occurs approximately every 4 years and reduces the number of Bitcoins that miners receive as a reward for verifying transactions on the Bitcoin network. The halving event is designed to keep the overall supply of Bitcoins in check and control inflation. When the halving happens, the reward for mining a block is cut in half. The first halving occurred in 2012, the second in 2016, and the third one occurred in 2020. It will continue to happen every 210,000 blocks or about every 4 years, until the total supply of Bitcoins reaches 21 million. After every halving event, we have seen a significant rise in the value of Bitcoin. So a lot of crypto enthusiasts are saying that when the next halving event comes in 2024, we will see a large Bitcoin rally. It's worth noting that Ethereum has a different monetary policy than Bitcoin. Ethereum is not designed to be a scarce resource like Bitcoin, but instead it's designed to be a platform for decentralized applications and smart contracts. The Ether is a means of paying for the computational services provided by the Ethereum network. So unlike Bitcoin, Ethereum does not have a total maximum number of tokens. Rather, it has a maximum number of 18 million tokens produced each year. But with both of these cryptocurrencies, there is no way for a government or bigger organization to print too much of them and make them lose their value. The last major reason crypto could succeed is that major governments like the United States government could pass regulations that actually lead to higher crypto adoption. How would regulation actually help here, you ask? Well, there are 4 main ways. First, government regulation can provide legal clarity to businesses and individuals who are considering using or investing in cryptocurrencies. Clear laws and guidelines can make it easier for people to understand the risks and benefits of these currencies and to make informed decisions about whether they want to use them or not. Second, government regulation can help protect consumers from fraud and other types of financial crimes associated with cryptocurrencies. By setting rules and guidelines for the industry, regulators can ensure that consumers are not taken advantage of and that their funds are kept safe. As we've seen from the Voyager, Celsius, and FTX collapses that have wiped out billions of dollars of everyday people's money, consumer protections are definitely needed. And third, government regulations can improve the security of cryptocurrency exchanges and wallets, which can increase public trust in the technology and encourage more people to use it. So, if the US government or other major governments pass sensible regulation in regards to cryptocurrency, we could definitely see a rally in its value. But before you go and invest your life savings into Bitcoin or Ethereum, let's talk about why Bitcoin and Ethereum could still fall even more. The first reason crypto could continue to fall is that more businesses could fail. We saw that both Bitcoin and Ethereum dropped by as much as 30% over the news that FTX was collapsing. If you would have asked any crypto aficionado a month prior, they would have all said that FTX was a great company and was a totally safe place to put your money. Now, that has obviously been proven false. So imagine what would happen to the value of Bitcoin or Ethereum if Binance or Coinbase announced that they were having liquidity troubles, or if their CEOs had some personal scandal come up. Obviously, we hope this wouldn't happen, but if it did, it would seriously hurt the value of cryptocurrencies. If you're going to invest in Bitcoin or Ethereum, you have to take into account this additional risk. When you invest into the stock market through Fidelity or a Vanguard, you don't have to worry that the exchange itself will go bust. Will Binance or Coinbase fall? Probably not, but if they did, the crypto winter would get a lot colder. The second reason crypto could continue to fall is that interest rates could keep rising. We talked earlier about how interest rates and cryptocurrency have been highly correlated over the last year. And we talked about how if interest rates fell, we would most likely see a rally in crypto, but the opposite is also true. If inflation continues to persist and the Fed keeps raising rates, crypto prices will likely remain depressed. We don't know how high the Federal Reserve will push interest rates, but we need to be aware that inflation could recede quite quickly, like in our pro-crypto section, or it could stubbornly stay around and require the Fed to raise interest rates higher than we initially expected. If investors could invest in a perfectly safe treasury bond and get a guaranteed 4, 5, or 6% return, why would they put their money into a speculative asset like Bitcoin? And that leads us to our third reason why crypto will continue to fall. There is no use case outside speculation. Until someone creates a use case besides just being a store of value or sending remittances home, Bitcoin and Ethereum prices will never meet their full potential. In the case of Bitcoin being a usable currency, there needs to be more opportunities to spend it rather than just buying a Tesla or buying stuff in El Salvador. Bitcoin, due to its lack of widespread acceptance and its extreme volatility, is still an inferior currency when compared to the US dollar for most daily use cases. Why would a grocery store price things in Bitcoin when by the next day the prices would be entirely different? And with Ethereum, the promises of big decentralized finance that doesn't need any financial institution to execute payments is awesome. Making fraud harder because you can't fool the blockchain? Really cool. Making healthcare more efficient and accurate or creating smart contracts that save time and manpower is awesome. But let's be honest, in all of my reading, I couldn't find any real-life examples that were actually being used to solve any of these problems, except for the use case of creating a stablecoin. If you do have any examples, please feel free to share them in the comments below. I'd love to see them. But unless these technologies can solve real-world problems, they will forever just be a speculative money-making talking point. Now, the fourth reason why cryptocurrencies could continue to fall is that the government could introduce regulation that significantly reduces the attractiveness of crypto. Government regulation of cryptocurrency can hurt it in several ways. It could create barriers to entry for new companies, which could stifle innovation and competition, or it could create heavy-handed regulation that can make it more difficult for individuals to buy, sell, and use Bitcoin and Ethereum, which would reduce their utility and their adoption. Furthermore, strict regulations could also increase compliance costs for businesses, which could lead to higher prices for consumers and therefore less adoption. And finally, government regulations could also lead to the censorship of certain types of transactions, which would be at odds with the whole decentralized finance and open nature of many cryptocurrencies. So just as much as crypto could prosper because of government regulation, the government could also deal a death blow to its adoption if it really wanted to. And finally, the fifth reason why Bitcoin and Ethereum could continue to fall is increased competition from inside the cryptocurrency space. In this video, we've talked primarily about Bitcoin and Ethereum because they're the top two cryptocurrencies right now. And honestly, I think they'll probably stay that way. But there is the possibility that someone invents a way to solve a problem with an all-new token that could eclipse Ethereum in its efficiency for smart contracts or work better as a medium of exchange than Bitcoin does. We don't know what will happen or what will be invented. Just think of it like this. If you went back in time and told someone in the year 2000 that Yahoo in 2023 would be pretty much obsolete because this little company called Google came in and decimated it, they would have laughed at you. But just like at the time that seemed crazy, it may seem crazy right now that a new cryptocurrency could come in and dethrone the king and queen of crypto, but it is possible. Now I know that I haven't told you that crypto is going to go to the moon or crypto is going to go to zero, and maybe you're more conflicted now about what you think will happen with the future of crypto than you were 10 minutes ago. But I actually think that's a good thing. The reality is that investing is all about taking the pros and cons of the future and making educated guesses about them. And with crypto or anything else, if anyone ever tells you that one thing must happen or is for sure going to happen, I hope this video has shown you that things are a little bit more nuanced than that. Thank you guys so much for watching. If you want to see more videos like this one, be sure to subscribe. If you want to see some of my other videos, you can click here or here. And since you're still here right now, you probably enjoyed this video. So give it a like. I hope you guys have a great rest of your day, and I'll see you next time.